Yesterday, we had the highly anticipated Q2 Tesla earnings come out, but the stock price seemed to fall post-market hours. Were the results really that bad? Were people really not very pleased with them? Or was this just a case of the market focusing on a single miss, and actually this is just a normal post-earnings sell-off? So I want to discuss some main takeaways from these earnings, and then at the end, I'm going to talk about what I plan to do with my Tesla stock moving forward. So firstly, they reported a record quarterly revenue from their core automotive business of $21.27 billion. That was a 46% increase year over year, or a 6.3% increase from the previous quarter reported. That is pretty big. Then the revenue from the energy area of the business. So this is energy generation and energy storage. Now this was also up by 74% year over year. So again, fantastic. But then if you started looking into the numbers a little bit more, you may have noticed that it was actually a decrease from the previous quarter. So then you start to worry, okay, is the growth slowing down? What's happening in this area? Then you do a further dive into the solar section in particular, and you're worrying about the numbers there. But let's just get onto all of that in a bit, because I have some things to say on that. And I've been doing lots of research into the energy sector of Tesla, particularly recently, and I'm definitely bullish on this area. So we'll get onto that in just a bit. The revenue from services and everything else that Tesla does also was up by 47%. So firstly, this is a big win from a revenue standpoint. The top line of Tesla is doing really, really well. The numbers came in great and the business is looking healthy. Tesla are still outperforming the S&P 500 and the rest of the automotive industry on a year-over-year basis on revenue. So what about the bottom line of the business? So this is all income after expenses have been deducted. The net income came in at $2.7 billion, which was about a 20% increase from last year. Like I mentioned in my previous video, Tesla reported record numbers of vehicle deliveries, 466,000, and that was absolutely insane. And that happened despite there being an underutilization of newer factories. So imagine if these factories got to full capacity and even more factories were made, what numbers could they be achieving? It's mind-blowing, really. So I think when we're looking at earnings and we're seeing some misses, which we'll get onto in a minute, you've kind of got to put everything into perspective and think about what they're actually doing compared to maybe their competitors and things like that. A big metric that people focus on with earnings is EPS, earnings per share. I guess it's kind of in its name, right? But the expected earnings per share for Tesla was 82 cents per share, whereas they came in beating that estimate at 91 cents per share. So they managed to beat expectations and do really well in both their top line, beating revenue expectations, and in their bottom line, as we saw with the EPS numbers. So things look really good, right? They seem to be doing really, really well. But yet the stock price seemed to fall in after hours in the market. So why was that happening? Well, it's because they did miss on one metric. They reported an operating margin of 9.6%, which is still a fantastic operating margin. If you go and compare this to other businesses in the same sector, or you just, think about it from a logistical point of view, this is a really, really good operating margin, sitting at around 10%. That is a healthy margin, but it is the lowest that they've reported across the last 5 quarters. So of course, if you just see that number standing alone and you just see it dropping from the previous 5 quarters, you're kind of a little bit concerned maybe. So I think some people were a little bit disappointed in this decline and maybe started to think that Tesla has lost their growth touch. But I do think it's important to point out the reasons, and they are clear reasons, as to why we saw this decline. One big reason is the price cuts that the vehicles saw in Q1 and early Q2. And also they were putting money into ramping up their 4680 battery cells and things like that. So this decline in margin is quite easily explainable. But let's not forget that we had record delivery numbers. The price cuts are just making Tesla more competitive and have a higher demand than ever before. The fact that they have been able to have price cuts because they want to and still be profitable and have unrivaled margins is pretty impressive. These price cuts were just a simple response to the macroeconomic situation. And Elon Musk has said that if times get tough in the future again and there is a need for further price cuts, they will do the same thing. We saw that they reported a free cash flow up by about 60% year over year, which again is very positive. It shows that they are generating enough money from their operations to fund their future growth and future projects. I have seen some reports suggesting that Tesla could be heading into a cash problem, a bit like Apple did in around 2010, where basically Apple had too much money. What a problem. I wouldn't mind having that problem. And they just basically couldn't use all that money, and it was becoming a bit of a liability. And some people are saying that Tesla are heading into that way because they now have like $1 billion in free cash. I don't think we're quite there yet with Tesla as we saw with Apple, but we could maybe see a dividend in the future if this does become a problem. Having said that though, I think Tesla are going to just keep reinvesting as much money into their future growth and future projects that potentially could be massive catalysts, right? Let's not forget that, rather than maybe paying a dividend. Or they could focus on debt repayment, maybe a buyback, things like that. But at the moment, I don't think it's anything that we need to worry about as investors. But of course, do your own research, make your own judgments. Obviously, when it comes to Tesla, the car side of the business gets the most visibility and gets the most traction. It comes down to this whole thing about Tesla not just being a car company, which is a narrative that I firmly believe in, and I know a lot of other Tesla investors also see that side of it, but I still see lots of comments saying that Tesla is just a car company. But I guess that's a debate for a whole other day. That's their largest part of their revenue for now, right? Their car side of the business. It's currently generating the majority of their revenue. But I have spoken about their energy generation and energy storage side of the business in a previous video. So let's just touch on some of the results that came out there. Year over year, the revenue from the energy business increased by 74%. So we are seeing growth there. It does seem like right now, when you dig into the numbers a little bit, that the solar generation, the solar side of the Tesla energy sector, that was really hard to say, the solar panels, the solar roof basically, is struggling a little bit. But it seems like the energy storage section is really in demand. I know that the mega packs are not available until Q1 2025. So clearly the demand is higher than they can supply them right now. The energy revenues were down in Q2, so the earnings that just came out compared to Q1 this year. But I do think it's important to always compare comparable quarters. So Q1 this year to Q1 last year, Q2 this year to Q2 last year, and then look at it as a year over year basis rather than looking at Q2 this year, comparing it to Q1 this year. Because especially for something like energy generation and energy storage, there is going to be such difference between the different months of the year and the different quarters of the year. So in the US and in the UK, Europe in general, this area of the world, Q2 and Q3 tend to be the warmer months of the year. So people aren't really thinking about and aren't really investing into energy generation and energy storage. Whereas in the cooler months, so Q1 and Q4, they probably are thinking about that because they're having higher energy prices. They're perhaps seeing that there's outages and things like that. So it's definitely important to think about what you're comparing when you're looking at these earnings. Like I said, perhaps the energy generation sector isn't doing so well, but the energy storage does seem to be really ramping up and really growing. So the energy storage deployments that were shown in the earnings increased by 222% year over year. That is massive, and that was mainly due to the mega factory. So the mega factory is basically a massive factory that has the goal of producing the mega packs, and the capacity is 10,000 mega packs per year from that factory. There is currently one built factory, but they are also in the process of getting another one up and running. But that factory that is currently being used is not even at full capacity yet. And I expect we will also see more mega factories being built in the future as they start ramping up this area of the business further and further. And I think these mega packs are going to grow the energy business of Tesla insanely. I'm not going to dive into that anymore because we'll be here all day, but I did make a video recently and I plan to make more in the future. So I'll link the video I made somewhere here. Check that out if you're interested. Now, they did include a note saying that the solar deployments came in relatively flat, and they put that down to a high interest rate environment. So we have to ask ourselves, was this a Tesla problem? Were Tesla specifically not able to deliver on these solar products? Or was this a more general macroeconomic situation that was affecting other businesses in the same sector? Is it a Tesla issue? or is it a macroeconomic issue? Tesla themselves said that there is a postponement of solar purchasing industry-wide. So perhaps this is actually just an industry issue rather than Tesla doing something wrong. I saw this tweet yesterday, which I thought was pretty cool, so I wanted to share it in this video. And it's basically a graph that this guy made to demonstrate how Tesla energy margins are now surpassing their car margins. Like I said, I've been doing lots of my own research into Tesla energy recently, and I've definitely been building my own convictions towards this area of the business. And I kind of understand now when Elon was saying that the energy sector could potentially become bigger than the automotive sector of Tesla. I'm now seeing that, and I think people are probably still thinking that that's a bit mad and how could that ever happen. But I believe over the next few quarters, and this quarter if you look deeply into it, you will start to understand that this really could happen. Another exciting piece of news for Tesla investors is that they confirmed they are continuing to target 1.8 million vehicles to be delivered in 2023. But they did say that we should expect to see a fall in Q3 due to them upgrading their current factories. Now, what will probably happen is that these numbers will come out. We will see a fall in Q3, just like they've said, just like they've told us will happen. And then we will start seeing reports that Tesla can't keep up with production, they can't produce things quick enough, and the Tesla stock is over and everyone should sell and things like this, even though they have literally told us, and there is very valid reason why, and making these investments into their factories now is only going to help them in the future. But let's not forget, they've just told us that they're making factory updates. That's pretty big as well. There is literally so much more we need to talk about. So many more things that were covered and touched on in the earnings. We need to talk about Cybertruck, Dojo, just a load of things. But that was a high level overview from the earnings. And I'm going to now just spend some time talking about what I plan to do with my Tesla stock moving forward. But I will make future content, future videos on all the other things that we need to discuss. So you may have seen that the stock fell post-market close as the earnings were coming out. Right now, it's the 20th of July for me and the US stock market is not currently open. But by the time you're watching this video, we will know how the stock responded to the earnings yesterday. And I'll know that obviously in real time, whereas this video will come out not real time because it's not a live feed. So it'll be interesting to see how that responds. But I personally thought the results were good. I'm pleased with them as a Tesla investor. And I think the margin decline, which is sort of being picked up a lot, was really, really well explained. We're seeing growth on both the bottom and the top line of the business, which again is really positive. They are continuing to invest back into themselves, and the new projects that are coming up and the new products that are coming up, you know, it's really exciting. And some of those projects in particular, robotaxi, full self-driving being sorted, Tesla bot, all of these things could be massive catalysts for Tesla stock in the future. My plan is that if the stock drops today due to earnings, I will probably just buy more. I will take that opportunity and, you know, throw some free cash that I have into the stock. I wasn't planning on investing today, but if it falls, I'll make the most of that because I always reserve some cash for situations like that. I will obviously let my Discord members, my Patreon members know if I do decide to do that, as I post all live buys on my Patreon. Sign up if you're interested. But if it doesn't, and if it actually just continues going up today, I'll probably wait a little bit for the market volatility to sort itself out, and then I'll continue to accumulate more shares and continue with my long-term investment plan into Tesla. So let me know your thoughts on the Tesla earnings. And like I said, subscribe for more content. I'll be covering way more points that were spoken about in the earnings in future videos. Thank you so much for watching, and I'll see you in another video very soon.